Dear Inderes TV viewers, we release an updated report on SciBase, and today we'll discuss about the company with our analyst Antti Luiro. Hi Antti.
Hey.
So our report says that SciBase's investment case rests on an attractive foundation. Why is this, and what are the drivers for potential revenue growth in the future?
Yeah, absolutely. So I think you need to look long term with a company like this, of course, and that's the only way to invest in a company like this. But if we think of SciBase's position, if they're successful with their strategy, it is quite attractive. So if we start from the market, which is basically you have the skin cancer diagnostics, and then you have the skin barrier, which is kind of a bit later on. We're talking about pretty big markets, especially in melanoma. If you're able to detect one of these lesions that is becoming cancerous early on, the patients are going to do a lot better with the treatment than if you find them later on. And there's a big need to avoid these unnecessary deaths by better diagnostics. And if we think of the product that SciBase has on this, of course there's a long history of development behind it. And it's not fast to develop a device like this and get it to the market, but SciBase has it. And if we look at the competing devices that are out there in the market, to be frank, I think they don't look super competitive. So if you think of where SciBase is, they have quite good key opinion leaders already advocating for the product. The accuracy that they add to the diagnostics is pretty good, and the price is not too bad either per use. So you have this big market, clear need, and you have a product that seems competitive. So that, of course, is a very kind of attractive starting point. But of course, all of this is a longer term thing. So right now they're pushing towards the markets, trying to get to a place where they can make good use of these advantages. And I'll still add to that also the business model that they have, because it's based on the devices being sold first to the clinics, and then based on the consumable use. So whenever you use SciBase's Nevisense device, you use the consumable tip of the device. And this is a very high gross margin business, and it's a recurring business model. So if they get to the market and they get to the market position, which I think based on what we see with their product's competitiveness and the market's demands, is a very good possibility that they're able to get there in some time. They're going to build a very nice business around it.
Okay. Well, we updated our recommendation and target price for SciBase due to the share no longer trading with unit rights and warrants. Could you tell us more about this and the capital raise package behind it?
Yeah, absolutely. And there's many elements to the capital raise package, and it's a bit complicated. So let's try to break it down. So obviously, why is SciBase raising capital? They're still in an early stage of development where they're spending cash to push their products to the market. So getting the insurance coverage and doing work, especially on the skin barrier side, to develop new products. So they're still in the kind of early commercial phase. What SciBase did is that they're going to collect funds from both directed share issue, which goes to mostly private individuals or institutional investors, which of course for the long term of the view of the company is very good, because if you have these kinds of investors who are looking on the long term and they have some money on the line, they're quite likely investors in the future rounds as well. And since SciBase is probably going to need still a raise or two, it's very good to have that. And then they're doing a rights issue. So this is for the existing shareholders, where every share there's a certain ratio at which each existing share is going to get the unit right, so a right to subscribe shares. And it's roughly 2/3 coming from the directed issue and 1/3 from the rights issue, if it is subscribed in full. Now the special dynamic about this is that warrants come with these unit rights and the subscriptions in the directed issue. So for every share that is subscribed to, the investors get 4 warrants. And with each warrant, you can buy a SciBase share at 0.42 SEK in the spring of 2029. And with this comes a very kind of special situation for the valuation of the company. Because usually, if you have just a small amount of warrants, it's pretty inconsequential for the valuation. It's like a rounding error, right? You have 5% warrants, it doesn't affect too much. In this case, 70% of roughly SciBase's shares would come from these warrants in 29 if the share is above the 0.42 SEK. Now, what this means in practice for investors is that the warrants have a very kind of significant claim to the upside of SciBase, and obviously anyone investing in SciBase is looking for the upside, right? Expecting the company to succeed. So what happens is that by participating in the capital raise, investors get the warrants, which have a very good claim to the upside of the company. And conversely, just owning the share without warrants does not have as significant of a claim to the equity value of the company on the long term. And this does bring quite special dynamics for the valuation. So if the share price goes above 0.42 SEK, then the share won't appreciate as fast as the equity value of the company because the warrants start getting a claim on the equity. So kind of a complicated situation to explain, but in short, the warrants that are coming out will be a very important instrument to take a bet on the upside of the company. I think that's the key bottom line.
Okay, thanks for this very approachable and detailed explanation.
I hope it was approachable. You can come to the Inderes forum to ask me more.
Yeah, at least for me, and you can comment in the comments below. But the success of this capital raise rests partially on whether the unit right holders actually uses the right to subscribe to the shares. And the share is, like you said, now well below 0.42 SEK subscription price, which means that the investors can buy the stocks cheaper from the market. Yeah. But still, you write that you expect that the race will be successful. Yeah. How does this make sense?
Yeah, indeed. So on the surface, of course, if you had a unit right which was used only to subscribe to the share, and that was it, then the value of that unit right would be negative now, right? You get shares cheaper from the market. Why use the unit right? But as I explained before about the warrants, these are an important instrument to take a bet on the upside of the company and its equity value. And you get 4 of these warrants for every share that you subscribe to with the unit right. So our view is that because those warrants have quite a bit of value in them, it makes sense for investors to use those unit rights. And that's why I believe the rights issue will be successful. Of course, it's a complicated setup. Will the warrants be valued correctly by investors? Is everybody going to sell the unit right if they're not going to subscribe themselves? We don't know. But I think the foundation and how the capital raise has been structured with the warrants being a very attractive instrument, I think the likelihood would be on the side of the rights issue being successful. But we'll see, obviously. I mean, it's the situation is ongoing and we'll see how the unit rights get subscribed. But based on the warrant value, I think it would be logical, at least, that this would be the outcome.
Yeah, right. Well, let's see what happens.
We'll see.
Well, before we talked about growth drivers, what about risks on the other hand? What kind of risks does SciBase have to deal with?
Yeah, so I think they're the typical ones for any early stage company. And of course, when we're in medical technology, there's some regulatory things as well. But I think the main thing is that when you have a growth story like this, where you're still spending capital with negative cash flow to get to the market, it's always possible that getting to the cash flow neutral situation takes a bit longer. I mean, usually when we get surprises in cases like this, and it's just a fact of life, and I guess in business that more often than not you get negative surprises than positive surprises. And could there be a setback in getting the insurance coverage in US? Yeah, that's possible. Could there be a setback in growing Nevisen's use cases with the regulatory approvals not getting approval for another use case as fast as they would expect? Of course. Could it take more time for customers to ramp up their use of Nevisen's, even if there's the insurance coverage, even if there's the FDA approvals? Of course. I mean, it's a conservative industry, and it does take time to build your position in it. And of course, there's a flip side. As a conservative industry, when you're in, you're really in for a long time. So these are some of the things that can happen. And given that the company still needs financing even after this round, at least in our estimates, around 100 million SEK, if you get these setbacks, then there might be a capital raise coming with terms that are not super good for the existing shareholders. And that is, of course, on the negative side. And then on the other side, you have the kind of big potential of the product, the really good business model that is built around it. So how you're looking at this, there's a big range of outcomes where the company might go. With potential comes the risk. So every investor needs to be aware that it's not a stable sailing kind of a story. And that's, of course, that's okay. That's the dynamic of the company. And some of these cases bring the best returns on investment. Our current view is that right now the risk reward is not attractive enough. But of course, we can paint the picture of a very, very positive future for the company. So what is the right time to take your sort of bet in a company like this, even if it becomes successful? That's a difficult question to get right, and that's also what we're trying to do at Inderes, right? We try to help investors figure out what's the right time to invest in a company. When are the risks and the rewards sort of in balance, where you actually get a good risk-reward bet? And company looks very good. Do you get a good risk-reward right now? I think not ideally. I mean, the valuation is pretty neutral. And if you look at our valuation methods, I notice I'm going with a very long answer here, but
that's fine. Go ahead.
Bear with me. If you look at our valuation methods, we've set our target price at pretty much the lower end of those valuation methods. And if you look at it, what are the drivers behind it? So the question is, when do the risks related to SciBase's progress in US start to sort of fade away? And when do we start seeing good progress that the US growth is happening, which eventually would then lead to the cash flow neutrality? Of course, they're also expanding in the DACH region, but that's the volume-wise it's smaller, so the US is the big one. And what we see right now, we expect that in 25 and 26 years, that's when really they should have the insurance coverage in multiple states and be in a place where they can already invest a lot in the growth and sales, because the customers eventually get also the reimbursements for the treatments and diagnostics done with the Nevison's device. So right now, if you think 12 months forward, I think there's going to be drivers and good signs from the US. Is it going to be enough to turn the risk reward to a more positive level at this pricing for the company? Still not sure. So that's hence the kind of neutral view on the valuation. But we will see. So obviously these things are hard to predict, and it might be a few pieces of news or one good quarter where you really see a breakthrough in one big customer kind of starting on, and that already shifts the whole idea of where the risk is. But tough to predict company, and as you never get away from that dynamic in these.
Right. Yeah, not an easy case.
Not at all.
Yeah, well, you already went to valuation and went through that pretty well, but I would just ask, just in case, is there something you still want to add to our valuation at the moment, and did our estimates remain the same regardless of the recent news? Yeah.
So our estimates had no major changes. So the last report we came out with was just for the unit right separation. So in the rights issue, the share used to trade with the unit right, so the right to be able to subscribe to shares and also get the warrants in connection to it. And now, since that was taken off, the value that was connected to that unit right is no longer with the share. So that was basically the gist of our last recommendation. And on the valuation, you look at the company, like I mentioned before, the warrants are a significant player here. So typically in these companies, you just value the company. What is the equity value? Enterprise value, so value of the business, then the cash, and you get the equity value, and then you split that to shareholders. But now with this company, you need to split that equity value between shareholders and the warrant holders. So for the investor, it's important to realize the big amount of warrants that's out there. And what we do with that is we try to value those warrants, and we try to deduct that value that doesn't belong to the shareholders from the valuation, so you can figure out what is the value for the share itself. And since we cover the share, we don't cover the warrants. Our coverage is about the share, and we give our recommendations for the share. I can't comment much more on the warrant valuation, but I think that's the sum of it.
Okay, thank you so much, Antti, for this interview.
Thank you.
And thank you all for watching. The fresh report on SciBase is readable on inderes.se and also commented in the description of this video. Remember to give this video a thumbs up and subscribe to our channel, and feel free to continue the conversation about SciBase in the forum. We'll meet again in other videos. In the meanwhile, remember to read analysis and make good investing decisions.
See you. Come roast me on our forums. I'm waiting for you.